How to raise money from banks. Actually, there are three ways. One is to rob a bank, second to take out cash from your bank account, and third to raise a loan from a bank. But it's not that easy because banks will reject you in 60% of the cases. And you would say, okay, maybe they don't have enough money to lend me, but actually no, they have enough liquidity in any country that you are, and only 30% of all the founders applying. What does it mean? It means that first we need more money. We need more money to grow. This is all we need as founders. We have more options with more money. With more options, we can buy better equipment, we can scale quicker, we can spend more on ads, and we have high return on equity. This is what matters the most, actually, all the debt fundraising things I'm talking about. So briefly about me, I used to work in Ernst & Young as an auditor. I'm ex-CFO, an entrepreneur. I have founded and scaled 36 companies. I'm fintech lending vertical, mostly 20 years experience there, and I overcome bankruptcy and addiction. And now I'm sharing my understanding and knowledge I have of 100 million euros fundraised for 1,000 companies within the EU. So the agenda for today is like 5-step fundability blueprint that we use on a daily basis working with our customers. So first you map where you are, there's a point A, then you set a point B, where you want to go, then you do the internal homework to go from one point to another point. Then you build a strategy to go there, right? And then you go. You apply, negotiate, and win. So first you start with map where you are. So the problem is that we apply blindly. We don't know where we are, what's our metrics. And what happens because we confuse ambition with preparation. Banks are not measuring our emotions or plans. They're measuring our reality. Like with a weight. In order to lose weight, you need to buy scales. This is what works. So the right way is use the funding map, the capital map. I talk about the webinars and masterclasses, and you can buy it on one of our websites to audit your company. What is the revenue? What is the equity? What is the asset, right? What's the history? What's the traction? What's the cash flow? What's the balance sheet? So you want to all map everything that you have within your company. For example, the case. So we had once a customer that didn't file the annual report in tax authorities, and because of that, banks were not lending him money, right? So we said that to him, you need to do the homework. He did that, and after 6 months, he received funding. The second, you define where you want to go, the point B, right? I need cash, not enough. It's not a purpose, right? Why happens? Because we have many projects, we have many ideas, and we want to outline them all. No, you need a specific goal. What kind of equipment? From which country you want to buy? What kind of manufacturing line you want to add? What kind of revenue stream you want to add? And the right way is you to clarify the use of funds. How much, by when, in which way I need, and what will happen. What kind of return on investment I will have for that kind of purchase. And the timeline. The more specific you are, the better you will be off with talking to the banks. So the case, we had a fertilizer trader. So once the guys approached and said, we need money against the collateral. So it's asset-backed financing. They have a real estate, a flat in the city center. Okay, nice flat, good valuation. But it turned out that, that their goal was to buy some hockey sticks. And none of the lenders understood that. And the business plan was very vague, very, very simple. So they rejected. So after 3 rejections, they finally went to this offer that I have this fertilizer in Rotterdam port. FOB, all the pricing, everything is there. We just need to put that flat as a collateral in order to get the money. But they were funded. Then you do the internal homework. This is actually one of the masterclasses. I asked founders how many of you do like to have internal homework. 70+% said they don't like to do the internal homeworks. You know why? Because nobody wants that. I think from the childhood. And actually, bank sees if you did your homework, yes or no. So if you do your homework properly, then you'll be better off. What happens? We don't have reports, we don't have data room. When you do equity funding, you have the data room in place. Any lender will ask for that, the same here. And without that, banks will think you're not invested properly in the process. So the right way is to have a data room, know what kind of documents do you need. You can talk to the banks, ask what kind of papers do you need? Balance sheet, profit and loss, cash flow forecasts, some valuation reports, tax returns. You outline the list and you start doing that. Sometimes it takes a few months to prepare, right, to do that internal homework. Then you need to ask for an accountant. Maybe you ask for a lawyer. Maybe you need to restructure your company. Maybe you need to clean up the cap table. Maybe you need to clean up some assets. Maybe finally you need to show that revenue on a profit and loss statement, right? So this is the part of the homework that is right to do. We had a funny case. We had a farmer once. He said, I have 100,000 on my credit line in a bank, banks are not lending me, I'm not fundable. So this was his mindset. Okay, so he sent us a list of the things he had on the balance sheet, and we found a farming land and a tractor. I think it was John Deere or something. And we said, but why it's not on the balance sheet? He said, I don't know. I need to ask my accountant. An accountant was kind of old school lady in his 80s, and she said, I don't know. So he had a tractor and a farming land, but it's not booked in the company balance sheet. Now what we did, we gave him homework, he booked that, and then in a few months we helped him to fundraise money. The next form is to build lending strategy. So in most of the people we apply randomly. We send random applications. How many of you did that? I did that before as well. You send in random emails to random people, random documents, and then you sit and wait. It's like in hope and pray. This is the best strategy we can have in terms of when it goes to the lending, right? No, it doesn't work like that. But why does it happen? Because we think that by doing some random emails, we're actually ticking the boxes like to-do list for today. But in reality, we don't know the rules of how this game is played. Because we don't know the rules, we don't know how to play this, why we make these mistakes. So what's the right way? To map all the banks in your country, segment them, use brokers or use accountants, or you give a task to one of your employees, or you can do it on your own if you have a lot of time, and then you match a loan to business type, right? So not all the banks have specific products that are ready for your company. And then you map the banks, you map the products, you see how much money do you need. Maybe you need $500,000, but this specific bank works only from 10 million tickets, right? So you need to map those, and then you have a list, and then you find proper people, and then you apply, and then you do. So we had this case study, real estate developer, he believed he was not lendable. Again, one of the myths. Actually, we have like 22 myths on the website. You can check it out in the free resources. And okay, so the banks rejected him because he used to be a politician, and he has this land and no equity. But he thinks that the land is his equity. Bank is otherwise. Bank said you need to put another 30% from the project price, for the project cost, and then we can start doing that together. So we went to the alternative lenders with that customer, and we made a strategy that first he starts off with the alternative lenders, and then he goes to the banks. I unwrapped this case study, one of the masterclass we did, so you can check it later. So 2 years in the project, he got the money, he's building now, he's commissioning the house, selling the flats, and he's going for the second project. The fifth step is apply, negotiate, and win. So the problem is, we take the first offer, we sign it, and we're gone. How many of you did that? I did that before. So why is that? Well, because we think, this is the first and only offer. I know why, but we think that we cannot say no. If we apply to a bank, you need to say yes. No, it's wrong. You can say no. You can say thank you for your offer. I'm rejecting that, right? You can get a pause. The biggest mistake founders do, they just disappear. No, please write an email to your person in that bank, says thank you very much for your offer. I'm having few of those. I will consider them. I will, or I need some time to think, or think, I'm not taking that. I know why, but we take the first one because of the fear, because we think that nobody will lend us any more money. What's the right way? The right way is to apply to as many banks as possible, have as many offers as possible on the table, and then you push for the best terms. You push for the best interest rate, for the less commission, for the longest repayment period, for the best repayment schedule in order to have the cash flow stable. You push for the least, ask for the collateral, for the person guarantees. I mean, you can do that only if you have many lenders. If you don't have many lenders, then it's not possible. You have one offer, that's it. So we had a case, a real wholesale company, 6.2% was their annual interest rate. And they said, this is the best we can get on the market. Of course. And then I asked them, okay, but did you went to many banks? They say, yes, we talked about, but talking on the phone is nothing. You need to apply, submit all the documents. So we did that, and they decreased their interest rate by 1.5% per year. But when you calculate it on a daily basis, how much they have an economy right now, I think it was 3,000 euro per day. This is their, it's a big company. They have like tens of millions of euros on the balance sheet from the bank. But it's 3,000 euro per day. So this is what you need to think about. Okay, so to wrap up, we have 5 steps, and the main idea here is debt is not dangerous. The ignorance is the ignorance of not knowing how it works, what it is, and what to do with that. The second thing, there's fear is the fog, growth in the clarity. What do I mean? It means that when you know the process, it's much easier for you to understand. I'm not saying that all the business need to borrow money from banks, no. But again, banks were there for 4,000 years. They know what they're doing, and banks are earning their commissions and their interest rate on businessmen like you and me, right? So they earn, did you know they earn half of their revenue for the banks comes from the interest rate that we as entrepreneurs are paying for the borrowed funds? So the more you know the process, the better you are. You don't need to make a decision to, today to borrow. But again, it takes from 2 to 6 months to prepare and get money from a bank. So even if you don't need it now, you need to know how the process works, right? And what to do when it comes to the borrowing. And the last one, there's this iceberg term, and what I want to say is risk of not doing anything is much bigger than risk of doing. Because if you're not doing anything, first you're going down, the entropy. The second, competitors are doing. They're borrowing money and they're growing while you're standing still. So what's next? You can download our Ultimate Debt Funding Blueprint from a website. It's a total guide for you guys that you can do it yourself. You can download it, and there's all the steps necessary, how to prepare the company and how to raise money from banks. Or you can watch our masterclass recording. It's 90 minutes, it's 78 slides, and we have many founders join there. And you can watch, and today's video, you can see all in the details, all the 5 steps, all the myths, all the Q&As. We had very, very amazing Q&As back then. So thank you for watching, and have a nice day, and have a good business.